What's up, everybody? Welcome to the Average Joe Dividends YouTube channel. Happy Monday to everybody. This is portfolio update number 126. So what I did was this morning I deposited $100, and where that $100 goes depends on my allocation in this portfolio. We'll see what's underweighted, and looks like the ETFs portion of my slices is underweighted. So chances are that's where the $100 went to. But we're also going to see what this buy does to my future income for dividends as well. So what we're looking at right now, this is my M1 taxable stock brokerage account. We're just over the 270 mark at 270, 235 and change. And this is changing. This could go up or down as the market is live. We can see over here, down below here, the money weighted return of this portfolio over the last year is 35.47%. So pretty much in line with the S&P, pretty close. But this portfolio pays a higher dividend than like an S&P index does. And I like to buy individual stocks kind of as a hobby and kind of track them and kind of pick them on my own. So we can see that the dividends earned over the last 365 days, or over the past year, is $11,295.63. So I kind of look at that as kind of a part-time job. And what I do with all these dividends right now, the current strategy is to reinvest those back into the stock that paid them. So I just see those dividends going up and up. So let's go to the 3-month view. We'll see how we've been doing over the past 3 months. Up 5.87% over the last month. We're up 1.81%. Let's take the last week. So we're down almost 1% over the last week. So going down just a little bit, but that doesn't bother me because we've had just fantastic gains over the last year. And then today it looks like we're in the green right now at 0.42%. So let's go into the activity log. We'll see where this $100 went to. So looks like I had an extra penny in the account, so it put that to work for me. So I did a buy of $100.01. Again, this is based on my allocations, and what was underweighted is what it's going to buy. And it bought SCHD. The entire $100.01 went to SCHD, and I bought 3.53682 shares, so essentially 3.5 shares of SCHD, and we're going to see what impact this had on my ongoing dividends, how it's going to increase those with those 3.5 shares, what that's going to do to my income going forward. So let's go over to my Google Docs spreadsheet, and this is where I track all the positions within that M1 portfolio. And there are 52 positions in this portfolio, and they're all tracked here, and everything is arranged by the pay date. We're going to scroll down to October, and we'll see the dividends that have rolled in so far. We'll just do a quick count up. Everything in this green is for October. I have 2 dividends remaining, which are JP Morgan and BST. So far I've received $108.16. But most of my dividends are going to be coming with BST. I haven't put those down because I have not received those. And make sure to subscribe to this channel so you'll see me go over all the dividends that I've received. And I'm not just going to show you a spreadsheet. I'm going to go into M1 and show you the proof that those dividends indeed were received. And I'll show you the proof in M1. We'll go to the activity log and go through those one by one. Because I know a lot of people, they just show you a spreadsheet, and to me that's not enough proof to see what people are actually doing. So on this spreadsheet, I'll just go over it really quickly. It tracks the company, the ticker symbol, the share price. It uses a Google Finance function to pull that live, so we're going to see these changing. Here's the average share price that I've bought into, and you can see SCHD here. Here's my average share price, and here's the current share price. Here are the number of shares that I own. We're going to add 3.5 shares approximately to that. And then here's the market value. If I were to sell all these shares, I would get just over $100,000. Here's my cost basis for each position. Here's my gain or loss, including dividends. Here is that gain or loss expressed in a percentage, and anything above 25% will be in green. You can see Allstate is in green because it's above the 25% line. If SCHD goes just 1.8% above where it's at right now, it'll be in green also. Here's the dividends per share. This is quarterly for most positions except for these in blue, which are monthly payers. And the SCHD, I put that in purple because it's a variable dividend and it changes every single quarter. And then here's the current yield, and here's the yield on my cost for every position. Here is the pay dates. You can see SCHD just paid me on September 30th, and the last dividend payment is right here at $890.77. If the dividend remains the same for SCHD, which it probably won't, I'll receive $898.76. And the reason why the prior dividend and the next dividend is higher is because I dripped the SCHD dividends right back into SCHD. We're going to see this next dividend go higher as well because that's where my $100.01 went to. So we're going to see that change over here. It's going to go above the $900 mark. Chances are we'll see where it goes. But here's also, I tracked the increase from the last dividend, and some of these do increase them year over year. Most of them actually do, like Pepsi's been doing it decade after decade after decade, just like Coca-Cola. And some of these I have marked as VAR or variable. They either do a dividend increase multiple times per year, which is in the case of O, or they don't increase them year over year like Oracle. Oracle seems to do a dividend increase every 2-3 years, and they do a large one. I think their last one was like 50-75% is a large one, so they just don't do them every year. So we'll scroll over here and I'll show you. Yep, that pretty much shows everything on this sheet over here, at least for those columns. But we can see here, here's the total value of the portfolio live at over 270. Here's my cost basis. Here's my gain or loss, and of course that includes the dividends paid out. Here's the yield percentage for this portfolio on average, and I alluded to before that, like an S&P index or a total stock market index, while those perform very well over a long period of time, they don't pay the dividends that I want to see. They're about 1.4, 1.5%, while this portfolio pays 2.64%. And then here's my yield on cost, which is 3.45%. And the reason I don't go with just a plain index is I think sometimes they're missing things, or I want to concentrate a little bit heavier into things like SCHD. It doesn't have REITs, and they also eliminated things like Broadcom, which you can see. Look at my percent gain or loss at Broadcom. I think they got rid of it. Probably maybe the yield percentage was not high enough for Broadcom, but I'm not going to sell it. I think Broadcom has great days ahead of it still, so I'm going to keep holding things like that in this portfolio, and also things like NVIDIA. SCHD doesn't have those in there. Other like high dividend paying stocks or stock ETFs don't have those in there. Look how NVIDIA has performed for me. You could argue though that something like VTI, VU is going to have this in there anyway, but I think it's fun owning it because look where I bought it at. My average share price is $13.83, and here's the current share price. So it's kind of fun holding these at these gains. So, but you can also consider myself very lucky where I bought these, and it's it's not very replicable if showing where people bought things at the the low point, but I buy things also. I dollar cost average into a lot of different things. So we'll scroll down here. Here's the monthly cash flow average of the portfolio. It's currently paying $994.25 per month on average. The last months of the quarter pay the most: March, June, September, December, because most companies pay their dividends in these months. So what I do is I take the quarterly average, which is here, and I've divided by 3 to get the monthly average. So I look at this as a monthly paycheck. And then here's like an annual paycheck. You can see here, here's my strategy. I deposit $200 per week into this portfolio. I do a Monday and usually Friday buy, sometimes on a Thursday. And all dividends received are reinvested into the company that paid them. If a dividend is cut or suspended, that stock will be sold. And my strategy is I'm a buy and hold long-term investor. Here's some of the goals I have outlined for this portfolio, and as well as like net worth. And you can see the ones I crossed out. I have met those goals. So SCHD, we're getting close to the 1200 mark. We're not quite there. We're at, well, I should multiply that by 3 because we had that stock split. So it should be 3,600 shares should be the new goal with that there. And I have a few others with the BST. We're getting really close to the 2,000 share mark there. I'm at 1969. A couple more dividend reinvestments in like 2 months. I'll meet that and be over the 2,000 share mark. So what I'm going to do next is I'm going to grab some data from M1 and go to the holdings tab. We're going to import this into my Google Docs spreadsheet. Again, here's the 52 positions. I'll just scroll through these really quickly. You can see SCHD is at the top. This is the highest value position in the portfolio. You can see at over $100,000, and everything is arranged from the largest position to the smallest. I'll just scroll through here, and looks like NVIDIA is the largest single holding in the portfolio. And you can see these are just household names in here, like Aflac, Costco, McDonald's, Caterpillar, Pepsi, things like that. Home Depot, Lowe's, Procter & Gamble, Starbucks, JP Morgan. I'll get to the bottom here. And Pinnacle West is the smallest position at 825.40. So we're going to grab everything starting from the name column here and just grab everything here. We're going to do a copy. We're going to paste this into the Google Docs spreadsheet. And what it's going to do is it's going to capture the shares, average share price, cost basis for every single position in this portfolio. And all it's going to do essentially is it's going to update the number of shares, the average share price, and the cost basis for one position, and that's SCHD, because that's the only position that really changed here. So we're going to see that change. Let me scroll over here. We're going to see this change. The next dividend is going to go higher, as well as the monthly, quarterly, and annual. So go to M1 data tab. We're going to paste that in. It's essentially just going to change these 3 values here. But I grab everything just as I have it. Because if I would have bought fractional shares in every position, it would change it with that paste. So I don't have to type in the new number of shares, cost basis, or average at all. It does it automatically with that paste. And we can see here's what the new dividend will be. Of course, this is contingent upon SCHD keeping their dividend the same, which I don't think they're going to do that for Q4. Hopefully it's going to be a little bit higher. Hopefully it could be, in 26 or 27 cents. We'll see. But not quite at the $900 mark, like I said. So at $899.65. And let's scroll down here to the new dividend. So we raised it by, looks like 30 cents. So $994.55 is my new monthly cash flow average. We're going to carry that over to the monthly average dividend tracking tab. Anytime I do a buy or drip a dividend, anything like that, or there's a dividend increase announced, it changes the cash flow average for monthly, quarterly, and annual. But I track the monthly as line items, so we'll take that $994.55. We'll put that new entry in here with a $100 deposit. And there we see the 30 cents, and there's the event $100 deposit. And we'll just look at the events just for October alone, and we can see there's been quite a few of them starting with some dividend drips here, and SCHD and BST are responsible for most of the 624, but the others added to it as well. So we'll just scroll down, we'll grab this. You can see some are just for a few cents, some are multiple dollars, or like today's case was 30 cents, but you can see the sum there in the lower right-hand corner. I've increased my monthly dividend income by $8.26, and that's on top of the income. It's every month going forward. It's $8.26 more. So let's go on over to the dividend tracker tab here. And I've been doing these videos since January 2021. We can see the starting portfolio value at $18,700. Here were the dividends paid to me for the full month of January 2021. We're going to scroll down and get to more recent times here and show in October as well. We can see the portfolio value, well over $206 here in June 23. We can see tracking the quarterly dividends, the quarter-on-quarter increases, and then here are the annual dividends paid to me in 2023. Let's just take a look at the annual dividends paid to me so far in 2024. We're not even close to being done. We're at $86.80, so we're going to get way more than $10,029 by the time we're done here. Here's the average monthly dividend. We were above the $1,000 mark, but SCHD's Q3 dividend was a little bit lower, and there's the impact right there. It temporarily lowered it for that quarter, but in Q4, I suspect we're going to go way above the $1,000 mark again. And then in Q1 of 2025, it's going to dip again because SCHD historically pays their lowest dividend in Q1. So we can see there's that $8.26 in the monthly increase. We've increased the monthly dividend by 0.84%, and here's the annual dividends getting closer to that $12,000 again, and I deposited $100, so there's $800 right there for the month of October, and that will likely be my last deposit for the month of October, as we just about wrapped up October, just a few more days left. So to close out this video, we're going to go to my total net worth tab here, and I'll leave a link below to this Google Doc spreadsheet so you can see everything in the portfolio and just see how the progress has been tracked, as well as my total net worth here. And my dividend portfolio over here, this is about 15% of my total net worth, this 270 over here. But here is where the bulk of my net worth is invested in. I have a Vanguard account, and I'm invested in boring ETFs, and my total over there at Vanguard is $467,208. Here is my current 401k with my employer, and everything is an S&P 500 index fund. And if I had to start all over again, I would just keep it into stocks, no bonds, nothing else, just pure stocks, and almost at that $100,000 mark for that 401k. And my IRA here at M1, this is essentially my prior years of employment over here. So I have another account almost at $700,000. It's at $695K. And then here's that taxable brokerage account over here at M1. And then M1, I have my 1-year emergency fund earning 4.5% interest. That's what 58.8 is. And then at Synchrony, I have another savings account earning 4.3% interest. And then over here, this is my more, money I have on hand for, paying bills. But it's kind of a it's like a 2-month emergency fund. This is like a 6-month, and this is a 1 year. So I have a lot of cash stashed away there. And I keep that just in case of a job loss or you just don't know what can happen. And here is the home value of my home, which is not paid off. We're going to get to the liabilities here. Here is my liabilities. I have 2 of them. Currently, I have a credit card balance, but this I don't carry over to the next month. I'll be paying this off before it's due, so I won't pay interest. And that's pretty much what this 12 grand sits here for is I'm having this money earn interest while, before this is due. There's no sense paying it off. I'm going to have that 2387 and change accrue interest before I pay it off. There's just no reason to pay it off. And my other liability is my mortgage, which I would like to pay off. I think in 2025, we'll see. I've mentioned this several times before, I may sell this taxable brokerage account. Once this crosses the threshold of being able to pay off my home and also pay the taxes on the capital gains I've received from these, I will likely liquidate this so I won't have a mortgage payment anymore. So here's my net worth at $1,765,000. This is changing daily because the stock market either goes up or down, as it does every day. And here's the breakdown. I'm heavily invested in stocks, a little bit of home equity, and here's my cash position. And then here's how it is in pre-tax or after tax. Most people have their net worth locked up into home equity and their 401k, which is very hard to tap. And that's why I think it's important to have cash and also after tax, brokerage accounts, things like that. So if you're having an issue, something happens, job loss, whatever it is, whatever that emergency is, have enough to cover you so you're not stressed out. Here's the breakdown between U.S. international. And then I've been tracking, also here's my average monthly dividend with everything. That includes, my IRA, taxable brokerage accounts, 401k, because remember 401k also pays dividends as well. And I also count interest in savings accounts. And here's the average monthly dividend, close to $3,300. And then starting November 2022, I tracked my W-2 income as well as expenses to show a gap just between that. I have other income sources, and one of them obviously being dividends are not even being counted here. But you can see here, though, I've been tracking that gap. I think it's really important to make sure you have a gap every single month. I know things happen. In November of last year, I had a sick pet and some massive vet bills going on. So you can see I was negative there, but with all those positive ones, it didn't really matter. And then in February, my home was built and completed. And I had extra expenses in February, like moving and having to buy furniture and things like that. So that was a bad month for me there. But if we take a look at these negatives, I'm going to count these and just go over. And just with March alone, I'm counting all these negatives. With the positives of January and March, it wiped it out, and I was positive 26, 24. So you can see, as long as you have enough positive months, you're going to wipe those out. You can see how my net worth was at 1.284 in November of 2022, and just look now at the last closed month at 1.74. And there was no big windfall. I didn't win the lottery. It was just the gap, reinvesting that gap, and then my investments that I had on hand were going up, and you can see just the results of those. But we'll see how much of a gap I have for October. I think it's going to be smaller than the 1,918 because I had more expenses, some things I bought, and also buying some of the Christmas gifts early. But that pretty much sums up the video. We'll go back to what I bought, and was what a lot of people were buying with that stock split, which was SCHD. It went up and it's kind of come back down a little bit, and that's why I bought this. It was based upon my allocations. I'll go into that real quick again. We'll see where the allocations are. So if you have auto invest on an M1, it'll automatically invest it. And so we'll click on the ETFs, and I have BST and SCHD in here, and you can see that BST is overweighted here, and then SCHD is underweighted within here. So that's why I bought it. So thanks for sticking to the end of the video. If you got value from the video, please click the like button. Also subscribe so you don't miss future videos. Also, please let me know in the comments below what you bought today or what you're going to be buying this week. I like seeing those comments. So everyone, have a great week, and everybody take care.